Good evening and welcome to the StockX post-market recap for July the 11th. Today, the CPI report showed that inflation has moved down considerably. Now, a lot of people expected that the market would rip off this news, but the exact opposite happened. With the expectations that inflation will be 0.1% and coming in at minus 0.1%, you would expect that a rate cut would likely to come. Well, in my StockX mentorship program, I warned my team of a possibility of a potential sell-off regardless of the news that may arise. Now, the way I cultivated this analysis simply had to do with the fact that the call premiums were way above their thresholds. They were too expensive. And when you become an option analyst, you will find that when premiums become too expensive, when it comes to option contracts, there's always two sides of a table. There's call writers and call buyers. Same thing with puts and so forth. And when the premiums get to a very expensive amount where they're overcharging for, they premiums that are outside of the money, you're going to see an invitation from these call sellers, and they're certainly going to cause a volatility in the overall market. So let's go into today's trading session and discover how we managed to do very well, what are the key trades we've taken, and the strategies behind it. So we're going to be going over a lot of in-depth, and we're also going to be sharing some predictions about what's going to be happening moving forward. So first things first, as always, we start off with our gamma report that we share every day. Okay, these gamma reports are very important in order for our success. Now, the key things I want to highlight is first, these reports are provided before the market is even open, and there's no basically tampering. I know sometimes on Discord you can often pretty much just edit stuff. We don't do that here, okay? Everything that I do is set in stone. If there's something that needs to be edited in order for transparency, I always delete it and rewrite it, so that way we know that this post was not edited in any way, shape, or form. And that's very important to me and my team here, and that's what we always try to do. Okay, now a couple of things that you will see here. First thing is we mentioned that SPX based on the call gamma basically shows probabilities located between 5620 and 5650. So the best part about this gamma report here is that it really tells you when you need to be bullish and when you need to be bearish. Okay, yesterday I gave the same report. Pretty much I mentioned that once you break 5600, you're likely to see 5630, and we kill those calls. We had over 3 calls that and we all layered it up all the way up to 5630, and they all ripped more than 200%. Okay, now in this situation here, we explained that in order for SPX to be bullish, it would have to pretty much get through this 5660 zone, which is a gamma zone, and if it breaks, you're likely to see 5690. Now on the put gamma, I said this is a wide range and highly anticipated. I said if the market loses this factor here, if we get between 5610 and 5600, that's where we see the bearish side. I even mentioned that the lowest that we see today in today's range is around 5570, and that can happen if we get under 5600. Our neutral range is basically our chop range. So if the market trades in that range, pretty much we're in no man's land and you do nothing, right? And or you could write premiums if you're into that. So that's one way to look at it, right? So market bearish, possibility to see this range over here. Now if we look into today's report, you can see right over here, like what happened in SPX, exactly to the T. Pretty much we've seen the S&P 500 open higher, right? SPX futures, actually, if you look at futures, they went as high as 56.55, and then it started to move lower. It didn't even hit our 56.62 pre-market. We simply opened here, and since then we pretty much sold off right off the bat here. This is on the 30-minute. If we look at a 5-minute angle, you can pretty much see it from here as well. Let me remove these pivot points, so it's easier to see, and pretty much you can see right over here. Okay, now another key factor you will notice as well is that these are my inflection points. Okay, and no, my model is not based off these pivot points. Sometimes they do similarly align, but my option levels are designed off premiums. Okay, so if we take that away, you can pretty much see that as well. My level 3 is over here. Okay, now for further transparency, I want to also confirm this as well. You can see here that pretty much today you gave these levels, bullish levels and bearish levels. Each of these levels pretty much have a meaning behind them. Okay, our first inflection point was 5601. Okay, that's a gatekeeping level, meaning that if this if the market gets underneath this resistance 5601, that it's basically outside of the trading pocket. Okay, because 5650, 5601, that's usually like inside the pocket, in the gatekeeping levels, as I like to call them, right? And pretty much the definitions are all over here. The gatekeeping levels, the levels are crucial. The threshold that determines the market directions. Okay, so it determines the market direction. Those are the levels you see here, and level 2 confirms a trend here. Okay, so at 5662, and you can look back in my Discord with the details behind it, that confirms a trend. Okay, now I want to talk about this because this helps a lot of traders, right? When my level 2 hits, that tells you that the trend is confirmed, and then you want to focus pretty much on the downside. Okay, there will be pops off that level, and you can even see that over here. So pretty much what you see over here is the first initial pop off this level happened right over there. SPX popped 10 points off my level 1 bearish support right over there. Right, let's get that Discord back up, and you see that that's a strong resistance, and then immediately it just dropped right at my level 2 area. You can see there's a strong hold here, and eventually it breaks, and then you can see that my low of the day was 55.76. We're off by 2 points, but pretty much you see that exactly my level 3 is the bottom here. Okay, now level 3 by definition is the market's peak, or in this case the market's bottom at level 3. So we pretty much call that out over here too. Okay, and besides all that, I have multiple instances. I haven't pretty much called all the receipts, but I have so much history of confirmation where my model has been very successful in the past. Okay, and that's just me being transparent with everyone here. Now besides all of that, you can see that over here, and basically that's where the market moved off. Okay, now a lot of traders got messed up today. Okay, and that's simply because this is something that you wouldn't expect, but my room was definitely prepared for it. Okay, these levels that I've cultivated not only help you identify which route the market's going to go, which trend the market's going to go, but it eliminates your bias. Okay, and that bias is what's going to prevent you from, let's just say, adding hedges, taking advantage of the opportunities that the market provides you with, and making these decisions in a fast-paced environment is very crucial in order for you to be successful. So that's why my mentorship program will help you. Now, besides all that, we spoke about the gamma zones. We spoke about the details behind that. I want to talk about our record so far. Okay. Now I don't trade like large contracts. I stick to my 10 to 20, but consistency is my main thing here. Okay. So if all my plays that I'm currently holding go to 0, I end off the day with 13K here. Okay, so a couple of trades based on my trade log that you'll see, and I'll kind of move myself over here so you guys can see. But pretty much what we did today, coin, we call these out. These only had a max gain of 30%. This was probably my bad trade, not the best trade that I've taken, because in my opinion, if the trade gets you minimum 50%, I call it a good trade. If it doesn't give 50% in my room, I call it a failed trade. So far, coin is a failed trade. I'm not sure if it can recover. It needs a huge move in order for that to happen. But regardless, that's part of the details here. Okay, we called our SPX puts, and they made 100%. They were definitely paid more if we held it longer. That's okay. We have these Tesla puts now. these Tesla puts we simply bought off the news, okay? And if you guys look at the chart over here, interestingly enough, I called the Tesla top. Okay, so if we go at Tesla, so this is my weekly review. Okay, this is basically my weekly chart, looking at it from the bigger picture here and giving that information. So you can pretty much see that over here. I called the top at around 270. Okay, so this prediction here, which is also timestamped if we go to my analyst zone. All my analyst zone content happens at the beginning of the week, and everything is set in stone. So you can see here, July 7th, that's a Sunday. I said my estimated weekly high was 270, and pretty much gave all that content. You can see my chart over here that I provided, and there's no edits whatsoever. Okay, so that's very crucial to know about here. Okay, and I'll share about other tops and bottoms that we called out as well. But let's go back to our success here. Okay, so we see Tesla there, we see Nvidia. So we took Nvidia calls here, not so sure how that will work. These actually did manage to move around more than 50%, but we wanted to hold this to see if there's recovery. Our SPX calls, these were actually more than 100%, but I let them go to zero. My CRMs that I had from yesterday, this was a very good trade that went up to 70%. Broadcom was it had 50% minimum, but I'm not selling, right? So a lot of these trades, what you'll find is that pretty much my risk tolerance grows higher as I have more profits. Okay, so if you're in my mentorship room, you need to make sure that you sell continuously, 50 cents or higher. You build those profits, and then you can take shots because you deserve to. All right, there's many plays that I have right here. I'm playing a smaller amount. So in my mentorship room, key thing is every play has to give minimum 50%, or else I basically call it a failed trade, and I acknowledge that. Okay, that's part of the thing about me being transparent. The second thing about me being transparent to all my members here as well, every size, every trade that I give is all called out over here. Okay, so if you guys look in over here, you guys can see I call out all my trades. I call it out pre-announced, when I buy and when I sell, and my winner circle is all over here on my trades that did very well. Okay, sometimes I forget to post it, but pretty much that's where you need to look for. Now finally, let's go over to our prediction component now. Okay, so this here is what everyone's waiting for. Okay, now first off, I want to start off with Tesla. Okay, so Tesla is slightly down pre-market from what you guys will see here, and the key thing here about Tesla is that now that it hit my estimated weekly high at 270, the reason why Tesla dumped, news came out that the robotaxi event delay is happening, okay, which in turn is very bearish. Okay, this is the whole reason why the stock went up in the first place. So it's very possible it could go to 230, and I'm swinging those 230 puts as well. And I know I overpaid for them, but pretty much it is possible to happen, because if this 237 breaks, guys, this is where the bearish breakdown happens. You can see a 7-point drop on Tesla, and that will cause the premiums to rise quickly. The thing about options is that when the speed of the options moves, that jacks it, and that's how you make a quick return off that as well. Okay, now keep an eye on GS. Okay, so banks are reporting. The banks that are reporting tomorrow morning before the open is Wells Fargo, JP Morgan, and you got Citibank as well. Okay, where's Citi? Okay, here, Citibank. Okay, so these three banks are all reporting, and pretty much you can see that they're trading around their 50-day moving average. Okay, worst case scenario, you see JP Morgan at 200. Okay, down over here. All right, so that means there's a 2 to 3% downside here, with their key strongest support here. Okay, now personally, based on today's CPI report, we're now technically in a deflationary environment. Okay, now I have my opinion about the overall stance on the CPI report, but I believe the numbers, of course, are fudged to to basically sway the political side of things. But overall, I still believe that if the report is in fact true, banks should show a very bad earnings. Okay, there should be a lot of loan losses. there should be pretty much, less deposits and so forth. Okay, so if the market is in fact deflationary, then that's what I think is going to happen moving forward. Okay, so that's one thing you want to watch for. Now, if their earnings reports are bad, two scenarios depends on how bad it is, right? If it's really bad to a point where the whole economy is at risk, you're gonna see tech sell off. If it's just somewhat bad, then you're gonna see rotation out of banks and into techs. Pretty much SPX is in no man's land. But if pretty much I think that the earnings report is going to show a little bit of sign of weakness, but I don't think it's going to be something that's going to cause a massive crater as of yet. But there's no prediction I'm really giving right now, because I believe today's sell-off had to do with the fact that it was, the call premiums were overextended, and that invited a lot of, pretty much call writers, as you call it, right? Because we were in my bullish breakout zone, and this is where the market is hot, right? This is where premiums explode, and I think there's possibility if the market does hold, you're probably going to see a retest here, and then you could probably go back down and then just chop in a new range, is what I'm looking at for now. Okay, now other stocks that we see that I call the top four is definitely SMCI here. Okay, so this was also timestamp. Well, we were off by 10 points maybe, but based on this candlestick, you can see that that level was very temporary, and pretty much 925 was key here. If SMCI breaks this 870, it has a potential to really drop here, maybe even 830 it can go to. ARM had a major sign of weakness. It basically topped off my level 1 bearish, and it looks like it's going to settle around my level 1 bearish at 172. Watch to see that if it breaks, then it's going to test this 50-day moving average. AMD, I called the top here as well, so this was my extension, and pretty much it's retesting this estimated weekly high. We're looking to see this as well. Broadcom, we're looking at this. It's unable to break this 1765. Now, the thing about Broadcom here is that even though this level 2 is far out, it should come back up. This was an opportunity where I was actually looking to buy calls. I wish I did, because if I did, it would have been an awesome play. But pretty much I wasn't too confident about the market. ASML, it hit my level 2, but I think it should recover here, because my level 2 confirms the trend. There are always going to be dips, but it's always going to try to go higher. Lam Research was in my bullish breakout range, very close to my top zone at 1132. It stopped at 1130, so that was literally 2 points away from my top, and then boom, it dropped. All these levels are, of course, are given here. The Nvidia, 134 was probably the top here. If it can get through 131, then it can recover. Otherwise, under this, you're looking at 125. Okay. We played Apple today as well, because Apple did look a little, pretty much weak, and they were selling megatechs. It's very possible that it can pretty much try to retest that 230. Amazon we're avoiding. Coin is all about Bitcoin, but it really needs to get through this 226 to really run. So that's what we're looking at right now. Meta also showing is at my estimated weekly low. I actually like calls out on this, but at a week, so I will consider that play for now. Tesla, it looks like it's going to get 230, and CRM, which we gave for, it's now in a chop range. This was an old chart, by the way. This is not something that's new, but I pretty much don't like CRM, and I may not trade that again. Okay, so I hope you guys enjoyed this information and charting session. Going tomorrow, we're going to talk more about premiums, and I want to make sure I do these recordings on a daily basis, so you guys see my transparency, the fact that I'm very consistent with my trades, and we can always find winners. Today we found winners on Apple, SPX, both on the downside and the upside, and I pretty much called out a lot of other plays as well, right? Including the Tesla put, selling Tesla calls and all of this. Okay, if you guys are really looking to join my community, check the link below my free Discord, and we'll see you guys on the inside. Alternatively, if you guys don't have the capital to invest into trading yet, then I recommend that you guys check out my school community for $30 a month. I'm going to be uploading a lot of courses on how to read premiums and how to do advanced charting. So I'll see you guys on the inside, and like always, let's get that money.